What's up, everybody? So in today's video, we're going to be discussing the differences between personal credit, business credit, and corporate credit, and what you need to do to get access to these different type of accounts. If you don't know who I am, my name is Kenny Johnson. I operate a credit repair company all across Canada, where we help Canadians rebuild and fix their credit. If you like the content that I produce, then it would mean a lot to me if you were to like and share this video. And so we'll just go ahead and jump right into the topic. So the first topic that I want to talk about is personal credit. This is where most people are going to fall. These are the individuals that are getting a personal home, a auto loan for themselves, a credit card, cash back, the typical standard items. You're going to fall into this category. Most people stay here because they have no need for the business or corporate. But with personal credit, I feel like it's extremely important that you hone in and master this section, because if you do desire to get over into the business or corporate and climb that ladder, then everything starts with the personal credit. And where we want to be, especially when we want to elevate into the other categories or other sections, we want to at least be, at the bare minimum, 680 plus. Now, ideally, we will be at a 720, because this is, again, where you can start getting those favorable interest rates. But 680 is a great starting point. But again, if you want to give your best, if you want to give yourself the best odds to move up, 720 plus, but again, 680 will be okay. Now, typically in the personal credit section, what's extremely important is that you are keeping your utilization extremely low. Okay, you are making on-time payments. All of the basic things that you may have heard me speak about, or that you may already know. With personal credit, you're going to be using the standard banks that we have across Canada, such as CIBC, TD, RBC. If you're in Quebec, Desjardins, they also have some locations in Ontario. Things like these institutions you'll be using. And then when you go onto their website and you're looking for a product to use, then it may be on that home section, or maybe you have to click into credit cards. And then it'll be that first page. Usually most banks are going to just send you right into the personal credit cards or the personal loans, because most people fall into this category. Very few, or a small percentage of people, actually end up using business or corporate credit, and even smaller use corporate credit. Okay, so most people are going to be in this section. Now, if you desire to get into business credit, let's say you're an entrepreneur, let's say you're a small business owner and you want to get business credit, then you're going to want to go into business credit. Okay. And from working with people that I have worked with in the past, or seeing comments on social media, one of the biggest confusions is that people assume that if they get into business credit, it is not going to show up on their personal credit score. This is actually not true. Okay, so in Canada, we have three categories. Again, I will go over it, and that's basically what this whole video is about: personal, business, and then corporate. And personal, when you pull your credit report from Equifax and TransUnion, everything that you have in under your personal is going to show on your credit report. And business, everything that you get in your business name is still going to show up on your personal credit report. Why is that? That's because even with business, you're still personally guaranteeing that if something happens with that account, that you, the individual, will be responsible for that debt. Okay. Usually with business credit, the second category that we're talking about, not corporate, but with business credit, this is usually considered small business. And small businesses, you may not have enough information for you to jump right into corporate, or your business may be too young and you're just starting out. So that's why it's extremely important that your personal credit is taken care of, that we're at a 720 plus. That way it's a lot easier for us to make that transition over to business credit. Now you may ask, hey Kenny, why would I want to go into business credit if it's just going to show up on my personal anyway? I can just stay with personal. Well, here's the difference. One, from a tax perspective, okay, you want to always, if you're operating a business, you want to be separating your personal expenses from your business expenses. Now, yes, you can open up another personal credit card, okay, and then just keep all your business transactions on that. But most people just rather go ahead and get a business credit card to keep all their business transactions there, and then keep all their personal expenses on their personal credit cards. If you I always advise you speak with your CPA regarding tax advice. But again, this has been my experience. It's always a lot easier for you from a bookkeeping standpoint, from a headache standpoint, and from a dealing with your CPA standpoint to keep these expenses separate. Okay, so we want to keep our personal, maybe on our personal cards, and then our business expenses on our business cards. Now, again, you may say, well, I'll just go ahead and get a personal credit card and keep all of my business expenses on that personal credit card. You can do that. Okay, you can do that. What you're going to realize is that all of these things are just a name. When you're dealing with accountants and CPAs, they just want to make sure that all the business expenses are on one account and all the personal expenses are on a different, totally separate account. Okay, so you can do that if you want to. But what I will suggest to you is that you eventually try to move over into business credit. And the reason why is because with business credit, you get access to higher limits of credit. Okay. This is a fact. Now, why do you get access to higher limits of credit? It's because typically with businesses, they are spending more than the personal consumer. Okay. Now, consumers are in a lot of debt. The average consumer, average Canadian is in debt. But that does not mean that that one person is going to be spending more than a business. Also, keep in mind that that individual that's in debt usually isn't able to pay back the debt, where most businesses that are doing well are able to pay back that debt. Now, let me show you my logic on this. In order for you to get that business credit, you need to have great, pretty much good or great personal credit. People that have good or great personal credit, once they make that transition over to business credit, they still don't have an issue with keeping those same habits that they had when they went into personal credit. So this is why banks are so much more willing to give business credit a lot more capital. Okay. With business, you also have many more expenses. Let's say, for example, let's say I run ads on Facebook. Let's say I run ads on Meta, just in general. You can scale your business just by running ads and you'll be spending a lot of money, right? And you're going to need higher amounts of capital. That's why business credit again is a lot more interesting or what you may be aiming for. Now, again, if you're just a personal user, maybe you're a self-employed person, you still can use business credit. Your business doesn't have to be registered yet or anything like that. Again, that would be a tax thing that you have to look into with your CPA on when is the right time for you to register your business. But if you're a self-employed individual, you still can use business credit. Again, it's going to give you access to higher amounts of credit so that you can cash flow on your business. This is the most advantageous thing you can do to help you grow your business. I'm speaking from experience that running a business is a lot easier with the credit card. And I am of the belief that credit cards are invented for business. Okay. I don't really think if you use it right, you can use it on a personal level. But really, credit is really built for businesses so that you can leverage, go out, employ, hire teammates so that you can buy the things that you need, get the work done, and then make money back off of what you send out, right? So you're sending out that capital to make money back. Credit is probably one of the best ways for you to scale your business. Moving on from this though. So once you've made the transition from personal to business and you've gotten comfortable with this, and let's just say a few years after you having your business, then you can make the transition over to corporate credit. Now, corporate credit is what usually people confuse with business credit. Corporate credit is not going to reflect onto your personal credit report. You do not need to personally guarantee corporate credit, but corporate credit is a lot harder to get access to. It is a much longer process to go through, and it takes a lot longer for you to even get to that point. Now, corporate credit is what we always assume to be business credit. Okay, so really, I like to say personal credit is what we know it is, personal credit, which is a great tool to use. Business credit is really just small business credit, and then corporate credit is what a lot of people confuse with what business credit is. Okay, so a lot of people come to me and say, "Hey, I don't want this credit card to report onto my personal credit report." Then what you're really shooting for is that corporate credit. Now the question is, how do you get access to corporate credit? Well, typically, most banks are going to require that you provide them with at least a minimum of 2 years of tax statements signed off by a CPA, meaning you need to have a successful business right away. Okay. And the business doesn't necessarily need to be ultra successful. Success is subjective, right? But you need to have something structured, right? And when I say structured, your business has needed to be been operating for at least 2 years, and you have a licensed CPA that has created these tax documents for you, or these balance sheets for you, to show your income, your expenses, your profit, and has been signed off by this accountant. Okay, so keep on so again, just that takes time. It takes years for you to get to that point. You've been paying this accountant for years for them to do this work for you, right? Now, it's not impossible, but it's something to build up towards. Okay, and the advantage to business to corporate credit is that one is not reporting onto your personal credit, and two, you get access to much higher limits of credit. You get the ability to maybe even leverage that debt to get higher value teammates. A lot of businesses will get into corporate credit to bring on higher level employees into their business, or to take on higher leverage opportunities, or take on higher levels of risk. Okay, and the thing about that again is not it's not going to affect you the personal level, but it will be against the corporate. The corporate business will be responsible for repaying that debt. Okay, or the business itself will be responsible for repaying that debt. Okay, so again, each one of these categories has their advantages to them. Okay, so if we're looking at a monetary standpoint, let's say let's say with a personal credit card, and it depends on the bank. These things vary from bank to bank. Max you might be able to get this thing up to is around 60K. I've seen more, but the average person, based off of your income and all these different factors, maybe 60K. Small business credit, you can easily get access up to 200K. And then with corporate credit, there really is no limit. Corporate credit is really gonna be based off of your financial statement, that balance sheet that your accountant is able to provide you. Because that balance sheet is gonna be able to show the banks how much you can handle year over year as far as debt is concerned, how you handle your active debt. So when you give that balance sheet, let's say you go into CIBC and you're applying for corporate credit, you give them that balance sheet, they'll be able to see how much debt your business has in total. They'll be able to see all the assets that your business has. They'll be able to see the profit margin. They'll be able to see how much you're expending on your employees. They're going to get a full breakdown of your business, and they are truly going to be able to evaluate your business to see how much debt you'll be able to handle. And a bank will never give you much more than what you can handle, because they have to mitigate their risk, right? Because this is really an investment for them, so that they can make interest off of the debt. Okay. So if you're in the process and your goal is to get to corporate credit, hopefully this video has provided you with some insight on what you should be doing to get to that point. If your goal is business credit, hopefully this video has given you clarity on what business credit in Canada actually is, what it takes to get to that point. And if you're just using personal credit, then hopefully this video has given you some insight on how far you can get with that type of account, or with those accounts. If you like this video, again, I would love it if you could like it, share with family and friends. I put a lot of my time, my team puts a lot of time and effort into creating these videos. And until next time, peace.